Hello, Assalamu alaikum students. This is your teacher Azka, but and today I'm going to start a series of past papers for O levels accounting 7707 and also for the IDCSC. Okay, so this particular paper is basically from October November 2023, paper 1 variant 2, and this is like you have time to do this paper in 1 hour 15 minutes. So first of all, I'm going to do the variant 2, and after that I will be solving the variant 3 or 1. Okay, so let's start. So I am going to start the very end of this paper, which is MCQ number 35. Okay, so this is a MCQ number 25. So in the last question is that Jake is a shareholder in a company. Okay, he received the company's financial statements. Okay, so why did he find the financial statement relevant? So basically, this is about the final accounts relevancy. And if the Jack is shareholder, so why did he find the financial statement relevant? Okay. So option A is that he was confident that they did not contain errors. So no, this is not the reason that why he is finding the financial statement relevant. The financial, because there is some errors in the financial statement. This can be like the financial statement which we containing, there are chances to have errors in the financial statements. Financial information was clearly presented. So financial information is where maybe if this is clearly presented, so this is not translating the meaning of the relevancy. The same depreciation methods had been used in the previous years. So this is a concept of consistency, but it is not like, again, maybe giving us a hint that why this JAG is finding this financial statement relevant. They confirm his expectations about the future of the company. Yes. So this is the main reason, because he is a shareholder. So for his like we can say that, because we have different stakeholders, and every stakeholder has some kind of, we can say, um, their needs and their wants according to their relationship with the company. So if he is a shareholder, so of course he will be checking the financial statements, and he will only be relevant with those financial statements if there is some kind of expectations that company is going to grow in the future and Jack will be having a higher dividend for his investment. So that's why B option is the right option. Okay, so 34. Trader values his inventory on the same basis at the end of the each financial year. Which accounting principle is the trader observing? Okay. So first one is the consistency. So basically, in the consistency means that companies are using the rules and regulations for depreciating their assets or valuing their inventory same for each year. So yes, this can be true. The B option is duality. Duality simple means that if one, like if any transaction is happening, so this will be affecting on two accounts. So at the same time, if your one asset is decreasing or crediting, so it will be affecting the other account also. So here, as you can see, that there is no duality concept has been discussed, so it means that B is not the right option. Matching. Matching says that you should match the revenue with the expenses for the year. So as you can see that here again, there is nothing like that, that we can say that, okay, in this example, matching concept has been observed. So this is not the right option. Realization. Realization says that whenever you earned income, or whenever you earned income from selling goods, so only that times you have to record those sales. So this is the realization concept, but here again, if you can see that there is nothing like that haven't been said in this example. So that's why D is not the right option. So A is the right option most probably. Okay. So in the next question, Laney provided the following information about her trading business. So for the year ended 31st August 2023, Laney has two types of sales, like revenue. First one is 250 and second one is 230,000, which is carrot sales. At 31st August 2023, trade receivables value is 19,530 and other receivables is equal to 2,100. So what was the Laney's trade receivables turnover? So for finding out the trade receivable turnover, we have a formula. And the formula is that we have to, first of all, we have to find out the credit sales. So credit sales over average accounts receivable, and we will be dividing it by the 365 because we want to find out its days. If you can see that options, basically they have given in days, so that's why we have to divide it by 365 days, because in the 1 year there is 365 days, and that's why we have to divide it with the 365 days. So now let's see. So our carrot sales are 230,000. And our trade receivable, which is 19,530. So other receivable is not the part of trade receivable. That's why I'm not going to write it here. So average accounts, so 19,530 is our trade receivable. Okay. So I have received 230,000 divided by 19530. So this is 11. This is 11 point something. Yes. 230,000 divided by 19530. So this is 11. So we have to divide it by 365 days. So this is the answer, which is 11.77. So now I have to divide it by, okay, so I have to divide the 365 by 11.7. So I have 31 days approximately. So this is my trade receivable turnover, which is 31 days. So it means that my right option is the C option. Okay. So now let's see the other one. So the other question is that business has the following assets and liabilities. So we have the assets and liabilities here. The owner's plans to pay some of his own funds into the business bank account. So if you can see that there is a bank overdraft. So into the business bank account to increase the current ratio to 2:1. How much does he need to pay into the business bank account to achieve this? Okay. So basically we already have the current ratio. So we will be using its formula. So what was the formula? So the formula was current ratio is equal to assets, current assets over current liabilities. Okay. So current ratio is 2:1 and our current asset over current liability. So if you see, the current assets is equal to 6,000, 2,000 plus 4,000. Inventory is 2,000, trade receivables are 4,000. So this is all together 6,000. And if I just want to make this current liability X, because I just want to find it out that if how much money I have to, like how much money this, what was the name of this person? Okay, so how much money this owner has to pay in the bank overdraft to increase its current ratio into 2:1. Okay, because whenever he will be putting his money into the business bank account, so it means that his bank overdraft will be reducing. So that's why if I just put X here just to find it out, so 2, so X would be here is equal to 2, sorry, 600 divided by 2, 6,000 divided by 2, 6,000 divided by 2. So this would be giving us the amount which is 3,000. Okay. So if you see, like, if I X is 3,000, it means that your current liability would be 3,000. So let's see that our current liability is 1,100 plus 3,100. So this is altogether 4,200. So if I just want to decrease the liability, so it means that I have to deduct this 3,000 from the total current liability, which is 1,100 and 3,100. So 1,100 and 3,100, this would be 4,200 minus 3,000. So that means 1,200 I have to add into my business account, and my bank overdraft will be decreasing by $1,200. So after that, I will be achieving this 2:1 current ratio. So it means that my B option is the right option. Okay. So a business provided the following information. Revenue is 20,000, gross margin is 25%. It means that GP is basically 25% of the revenue, and profit margin is 10%. There were no other income. How much were expenses? Okay. So first of all, let's do working here. So we know that if we have GP, okay, we can deduct expenses from it. And we also having the profit margin. So first of all, let's find out the GP. So how can I find out the GP? So I know that my revenue is uh what was the revenue? Okay, revenue was $20,000. So 20,000 multiply 20%, I guess. The GP is 25%. Okay, 25%. So GP is 25%. So multiply 25%. Because I know that I can easily apply this 25% on revenue, and I will be getting my gross profit. So now the gross profit is 5,000. 20,000 multiply 25%. Yes, this is 5,000 GP. And now what is the profit? So profit is basically 10% of the sales. So now again, if you want to find out the profit margin, so just apply 10% on the revenue. 20,000 multiply 10%. So this would be giving us 2,000 profit. Okay. And we know that if we deducted 5,000, if we deduct expenses from the 5,000, so I will be receiving this profit margin, this profit, which is 2,000. Okay. So now what I have to do, just deduct 5,000 from this, deduct 2,000 from the 5,000. So we will be having that expenses. So expenses would be 3,000. 5,000 minus 2,000. So this would be expenses. So we just worked, have done the reverse working. So it means that my C option is the right option. Okay. So let's see the other question. Ahmed provided the following information. Trade receivables at 1st January 2022, which is 15,000. And for the year ended 31st December 2022, we have the credit sales, we have the cash sales, we have received some checks from our trade receivables, and we have other coverable debts also. By how much had the trade receivable increased by the end of the financial year? So this is now very simple. What we have to do is we can make um, the trade receivable account here, but I guess that we should just deduct, like we can just calculate. Okay, so basically $8,500 we have this credit sales. Okay, so credit sales minus checks received from the consumers. So I'm just writing down the formula here. So 85,000 minus 65,000 and minus 2,000 because this is the irrecoverable debt, and this would be giving us the answer, which is 18,000, because we will not be recording cash here. Okay, so 8,500, sorry, 85,000 minus 65,000 minus 2,000. Okay, so this is basically 18,000. Answer for this question is 18,000. So 18,000 is the right answer. By how much had the trade receivables increased by the end of the financial year? This has increased by 18,000. So 18,000 is the right option. If you haven't understand this, so you can make simply a trade receivable account, and you will be knowing that okay, why I have deducted this information from here. Okay. So question number 29. Alan starting a business. She wants to make sure she doesn't miss out any cash discount which is offered to her. Which action would help her achieve this? Okay. So first of all, issuing her invoices promptly. But if you see, like she wants to make sure she doesn't miss out any cash discount which is offered to her. So basically, if she is issuing invoices promptly, so basically in this option, if you see that they are talking about this the Allen customer, not about the Allen. So that's why this is not the right option. Maintaining full accounting records or dealing with suppliers. Yes, this can be the option, because if like if she is maintaining the records, so it means that she can give the amounts properly and will be receiving the cash discounts. Making purchases in bulk. So if she is making purchases in bulk, so she will be receiving trade discount, not the cash discount. So this is not the option. Undertaking credit checks on all prospective customers. So again, this is about the customers, not about the Allen. So that's why this is also the wrong option. So B is the right option. Okay. So now let's see the other question. A manufacturing business provided the following information. We have closing in work process, factory overheads, opening work in progress, and prime cost. So what was the factory cost of production? Okay. So basically, if we want to find out the cost of production, so first of all, we have to add the factory overheads, add opening work in progress, and add this prime cost plus uh, minus the closing work in progress, Okay, and yes, I think we have done with all the information. Okay, so now factory overheads 20,945. Opening work in progress is 910. Prime cost is 40,750. Closing work in progress is 840. So we have the total factory production is 61765. So D option is the right option. So this is our factory production or cost of production. Okay. So in question number 27, which cost is direct factory cost? Carriage outwards. So carriage outward is not related to factory cost. So this is not the right option. Depreciation, because this is the customer related expenses. Depreciation of factory machinery. So again, this is not the factory direct factory cost because this is the overheads. Okay. Factory supervisor wages. Again, this is not a direct factory cost because this is the overhead. Manufacturing royalties. Yes, royalty is type of the prime cost. So D option is the right option. So in question number 26, sports club operates a shop selling running shoes to members. These shoes are purchased on credit terms from suppliers. Which item is recorded in the receipt and payment account? Okay, so receipt and payment account, this is basically a type of cash book for the MPUs. So first of all, we have the inventory of shoes. So basically inventory of shoes we will be recording in the income and expenditure account, not in the receipt and payment account. So this is not the right option. So in B, payments to suppliers. Yes, because this is a just like a cash book. So in the cash book, we will be writing receipt and payment. So that's why if you are paying something, some amount to suppliers, so this would be the part of receipt and payment account. So B can be a right option. Purchases of shoes. So if we put it in the shoes, so this is kind of our inventory and this would be the part of income and expenditure, not the receipt and payment account. Shop profit or loss. Again, this is the part of income and expenditure. So it means that B option is the right option. Okay. Z Limited has the following types of equity and liabilities. So these are the equity and liabilities. What is included? The company's shareholder equity. Okay. So if you see, okay. So first one is the debenture. So we know that debenture is not the part of shareholder equity. This is the part of non-current liability. So this is not journal reserves. Yes, journal reserves is a part of shareholder equity. So this can be right. Third, long-term loan. Again, this is the part of non-current liability, not part of shareholder equity. So again, wrong. Ordinary share capital. Yes, this is again the part of your shareholder equity. So this can be right. Preference share capital. So preference share capital also is a part of shareholder equity. This can also be right. Retained earnings. So we always add retained earnings in under the shareholders equity section. So yes, this is the right option. So 2, 4, 5, 6. 2, 4, 5, 6, 2, 3, 4. Okay, so basically we have D option because in the D we can see that 2, 4, 5, 6 option has it. So this is the right option and these are wrong option. Okay. So in the question number 24, which organization is most difficult to establish and has to comply with many legal formalities? So this is very obvious. Partnership has different liabilities, but not that much. Sole trader doesn't have any kind of legal formalities. But yes, limited liability company will be having a lot of formalities. So yes, C option is seems to be the right option. B is wrong, C, B is wrong, and A is wrong. 23rd, partner is charged interest on drawings and he made during the financial year. How is this recorded in the partner's account? Okay, so credit the partner's capital account. No, this would not be recorded in the capital account. This is the wrong option. Credit the partner's current account. No, we will be using current account for recording these drawings, but this will not be crediting the current account. Debit the partner's capital account. Again, capital account is no use with the drawings. Debit the partner's current account. Yes, we will be recording these drawings on the debit side of the partner's current account. So D option is the right option. Question number 22. Josh and Karen are in partnership, sharing profit and losses 3 into 2. Interest on capital is allowed at 5%. Salary payable to Josh is 10,000 per annum. The residual profit after deduction of the salary and interest on capital was $20,000. Capital account balances at the start of the year were Joe's 60,000 and Karen 40,000. What was the total amount credited to Joe's current account at the end of the year? Okay, so we only seeing the account of Josh, not the Karen. Okay, so first of all, let's prepare their current account. Account for Josh only. Okay, so let's see. First of all, if you see that um, the residual profit after reduction of salary, interest, or capital was 20,000. This is the residual profit. First of all, we have to divide it between the Josh. So residual profit is equal to 20,000. So in this basically three proportion for the Josh. So multiply by 3 divided by 5. So we will be having 20,000 multiply 3 divided by 5. Okay, so this is $12,000. Okay, so $12,000 would be the part of Josh uh, current account. Okay. Mm, so I think this would be recording on the correct side of the Josh account. Yes. Because if you see, like there is nothing written here because on the correct side there will be no salary, only the profit which Josh received. So A option is the right option. 12,000. Okay. So let's see the other question. 21. So at 1st January 2022, there was a credit balance of $800 on the electricity account. Payments made during the year totaled 4,900, and at 31st December 2022, a further $1,800 of electricity had been used since the last invoice was paid. What is the charge to the income statement of the electricity for the year 2020? So for this is like very simple. We are going to prepare electricity account for. So now let's prepare the electricity account. So this is our electricity account. It means that electricity account means our expense account. Okay. So first of all, if you see that we have the current balance of $800. So for this, we will be preparing a PAP account. P A A P. It means that if there's prepaid balance at the start of the year, we will be recording it here. If there is accrued balance at the start of the year, we will be recording it here. If there is balance CD at the end of the year, if the balance CD is accrued, so we will be recording it here, and this is prepaid, so we will be recording it here. So if we have the current balance, which is 800, so this is very simple. We will be recording it on the current side. So our balance PD, which is $800, would be on the current side. Payments made during the year total 4,900. So if we paid the payment, so our bank would be debit and electricity account would be electricity account would be debit and bank would be credit. So it means that we have to write it here. Bank 4,900. So electricity debit because it's an expense and bank is credit. At 31st December 2020, this is the year end, a further $1,800 of electricity had been used since the last invoice was paid. So it means that we have used this $1,800, but we haven't paid it. So it is basically accrued expense. So this should be right here, like on the credit side. So this balance CD, which is 1,800. Okay. So yes, I guess we don't have anything now. Mm, okay. So now we are going to find out that what is charged to the income statement. So 4,900 plus 1,800. This is 6,700. So 6,700 minus, because this debit side is the shorter, credit side is the shorter side. So 6,700 minus 800. So this is 5,900. So 5,900 would be the part of income and expenditure income statement. It means profit and loss account. Because at the end of the year, electricity account would be credit and income statement would be debit. So that's why we will be recording it on this side. So B option is the right option. So in the question number 20, a trader has capital of 24,400. His non-current assets are 16,100 and his current liabilities are 4,500. There are no non-current liabilities. What is the amount of its current assets? So now this is very easy again. We basically have to find out its current assets. So the formula is that assets is equal to capital plus liabilities. Because we have basically try to find out the assets. Okay. So our non-current assets is already written here, which is 16,100 is equal to, and our capital is basically 24,500. 24,400, sorry, and liabilities are 4,500. Okay, so 24,400. So we know that in the assets there are two types of assets: current assets and the non-current assets. Okay, So it means that the non-current assets we have written here, but we are basically try to find out the current assets. That's why if we just like write instead of writing asset, if we write non-current plus current, so it means that our non-current asset we already written here, which is 16,100, and our current asset we have to find out. So if I just write here the current assets, okay, and this amount will be transferring here. So 24,500, 400 plus 4,500, and I will be shifting this amount here. So here this is plus sign. So now if I shift here, so this would be becoming the negative sign. So this is 16,100. So my current assets will be 12,800. So C option is my right option. Okay. So in the 19th question, Aradin prepares her financial statement to 31st December each year. She valued all her inventory at cost on 31st December 2021, even though some inventory with the cost of 500 had a net realizable value of $350. What was the effect of this error? So basically, her inventory cost was 500, but its net reliable value was 350. So this Aridin should value her inventory on 350, not on 500, because we whatever the value, because if the cost of the inventory is lower than the NRV, so we will be recording our inventory on the cost. But if the NRV is lower than the cost, so we will be recording the inventory on the NRV. So if she has done mistake, so how this would be affect these things? So first of all, in the option A, gross profit for the year was overstated, because in real the closing inventory should be valued for 350, but she recorded it for 500. So it means that her GP is overstated. So it seems like the right option, but let's check the other options. B, total assets at 31st December 2021 were understated, but it is not, because we have written 500, so it would be overstated, not the understated. So this is not the right option. Profit for the year was overstated. So basically, your profit for the year would not overstated, it is understated, because if your GP is overstated, so your profit is basically profit for the year 2022. Okay, so they are talking about 2022. So that's why this is not like we basically trying to find out the answer for 2021. So this is not the right option. And again, as you can see that year is again changed here, so this is not the right option. So A is seems to be the right option. Okay. Question number 18. Imran maintains a provision for doubtful debt of 5% of trade receivable at end of the each financial year. Balance on his provision for doubtful debts account on 1st January 2022 was 700. Trade receivables on 31st December 2022 owed 2,000 more than they owed on 31st December 2021. Uh, okay. How did the change in provision for doubtful debt affect the profit for the year ended 31st December? Okay. So basically, if I want to write provision account here, okay. So balance on his provision for operator account on 1st January 2022 was 700. So it means that I have to write it here. Balance BD, which is 700. Trade receivable on 31st December owed 2,000 more than they owed on 31st December 2021. So it means that if trade receivable were owed on 31st December 2021, which is 2,000, which is more than they owed on 31st December. So it means that in 2021, maybe they owed 1000, and in 2022 they owed more than 2000 before in as compared to 2021. So it means that in 2022 their trade receivable would be 3000. Okay. So how did the change in provision for doubtful debts affect the profit for the year ended 31st December 2021? Okay. So if you see that provision was 5%, okay. So if you charge 5% on 2021 trade receivable, so this would be 1000 multiplied 5% divided by 100. So for 2021, our provision is $50. And if you again charge 5% on 2022 trade receivable, so 3000 multiply 5 divided by 100. This is 150. So basically, your provision has increased by $100. So it means that B option is the right option. Um, how did the change provision affect the profit for the year ended 31st December 2021? Okay, so basically we are going to talk about the profit, not about the provision. So provision has increased by 100. Okay, but if you see that if we will be recording 100 in the expenses, so it means that our profit would be decreased by 100 because our provision has increased by 100. So it means that option A is the right option. Okay, so let's see the other question, 17. So in the 70 question, on 1st January, Rahim purchased equipment costing 850. It was estimated to have a working life of 5 years and a scrap value of 50. So this is a residual value and this is the life of the asset. The asset was depreciated using the retail time method. At the end of 3 years, the machine was sold for 100. So what was the profit or loss on the disposal? Okay. So first of all, let's find out its depreciation. So 850 was the cost of the asset and its residual value was $50. So minus 50 divided by life, which is 5 years. So it means that our depreciation is $160. Okay. And we basically sold it out after 3 years. So it means that we have to find out the depreciation for 3 years. So 160 multiplied by 3, so this is 480. So it means that the 480 is the depreciated value, accumulated depreciation of this asset. Okay. So now we have to find out its net book value. So how can we find out the net book value? So net book value is equal to cost minus AD. AD is accumulated depreciation. So its cost is 850 and its AD, which is 3 years depreciation, which is 480. So 850 minus 480, so its net book value will be 370. So if you see that we have sold out for $100. So whenever your sale proceed is greater than the net book value, so it means that we gain on disposal. But if your sale proceed is lower than the net book value, so it means that we gain loss on disposal. So if you see that our net book value is 370 and our sale proceed is only 100, so it means that we made loss and loss is equal to 270. So B option is the right option. Okay, so 16%. Why are non-current assets depreciated? So this is very easy. To avoid overstating the value of non-current asset. No, it's not like that because the depreciated amount is just a forecasted amount. Maybe if you see like the market value is increasing for your non-current assets. So that's why this is not the right option. No, actually, yes. Yes, because we are charging depreciation because we just don't want to overstate the value of the non-current assets. Yes, because if the cost is 10,000 and its depreciation is 1,000, it is depreciated each year. It means that it's reducing its value So that's why it means that we don't want to overstate it. We don't want to record it on its cost. We will be recording it on its net book value. So that's why this is the reason that we are charging the depreciation. So in option two, to charge the cost of an asset as an expense over its lifetime. Yes, because depreciation is the expense of our for our income statement. To comply with the accounting principle of historic cost. No, basically in historic cost, we will only record a non-current asset or asset on the cost. But in in this particular thing, we are recording the a non-current asset on the net book value, not on the cost. So that's why see, this is not the right option. To match capital expenditure gains the income it has had earned. Yes, this is right. Because the revenue which we have earned that revenue just because of these non-current assets because we are using it. That's why we have to charge expenses. We have to write expenses as depreciation. So now we can compare or now we can match the expenses with the revenue. So this is the right option. So 1, 2, and 4. So 1, 2, and 4 is the A option. So A option is the right option. Okay. So 15. So we have to decrease our profit by 2000. So minus 2000 and is equal to 61,000. This is the new profit after uh, correcting the errors. So 61,000 B is the right option. Okay. So the next question is that when preparing a sales as a control account, what is the source of information for amounts we receive from the correct customers? Okay. When preparing a sale as a control account, what is the source of information for amounts received from the correct customer? Okay. So first one is a bank statement. So we know that bank statement is basically not for the correct customers. Basically, whenever we want to find out our transaction history, so we will be using the bank statement. This is not for the customer. So this is not the right option. B, cash book. Yes, cash book can be, we can use it because through cash book we will be saying that, okay, how much amount we have received in form of check or in form of cash. So B is the right option. Sales ledger control account is not the source of information. This is not something like because we are preparing sales ledger control account. So how can we find the information related to receive amount from the correct customer through this one? So this is not the option. Statement of account. This is not because statement of account we will be sending our customers that how much payment they have to pay us and but here as you can see that we just want a source of information from where we can see that how much amount we have received from our current customers. So in that case cash book would be the relevant option. So the option is the wrong option. Okay, so now let's see the 13. So why does a trader prepare a sale at the control account? So the first option is that a first of all to determine when interest should be charged on overdue amounts. No, it's not the right option. To identify irrecoverable debts that should be written off. So this is again not the right option because we have to prepare irrecoverable debts account separately. So yes, we will be recording in the sale and control account. We prepare this in like it's when we can identify irrecoverable debts by using journals or that's why this is not the right option. Locate the entire portion in the sales ledger. Yes, this is the right option because in the sale ledger we have individual accounts. It means that we are preparing each and every customer's account separately. So now we have to see that if there is any entire posting we have done in the sale ledger, so we can rectify it. So that's why C option is the right option. To obtain totals to enter in the books of primary. No, this is not the right option. Because sale ledger account is basically the trade receivable account. To obtain totals to enter in the books of primary, this is not the right option because uh, this is like books of prime entry. We are entering all the transactions or all the information in the books of prime entry by using the source documents. So that's why this is not the right option. Okay. So 12. Balance of the bank account in trader's cash book was $520 debit. Trader later discovered that the following items did not appear on the bank statement, which is check not presented yet, check not credited yet. So what was the balance on the trader's bank statement? Okay. So basically 520 was a debit balance in the cash book. So these checks are not presented in the bank. Okay. So we basically want to find out the bank statement. So bank statement basically didn't record this $80. So that's why we will be adding it. And this $470 we have recorded it. And bank is also recorded, but it is not updated yet. So that's why we will be deducting it from this. So 470 minus. So the answer will be 1300. So we know that 1300 is a positive amount, and bank would be using credit in front of this. Why? Because the amount which we save in our bank account, this would be the credit for the bankers, because this is kind of liability for them, because this is our asset which we just save our assets in their bank account, so they have to pay us whenever we demand. So that's why they will be writing credit in front of the amount. This would be the liability for them. So 130 credit. So in the 11 option, a check received from a D person, a trade receivable, was incorrectly debited to the bank account, but was credited to the account of P based on a trade payables. So what was the effect of correcting this error? Okay. So let's see. A check received of a PD person, a trade receivable, was correctly debited to the bank account, but was credited to the account of P Dawson. So it means that we decrease our trade receivable because we didn't record this in the D person account. And we credit it in the P Dawson account, which is a trade payable. So it means that we have increased the P Dawson account. We basically have decreased the P Dawson account also. Okay. So we have to record in the P Dawson account on the debit side, but we didn't record it. Okay. So it means that we decrease the P Dawson and was correctly debited to the bank account, but was credited to that account of P Dawson a trade payable. So this is a trade payable, P Dawson. So if we credit it, so we know that trade payable, whenever they credit, they will be increasing. So if we record it on the credit side, so it means that we basically crediting it, so it means that it is increasing. But what was the effect of correcting this error? So if we correct this error, it means that if we record it on the debit side, um, yes. So trade receivables, basically, if we now correct this error, so now we are recording it. We are recording debit side entry in the P Dawson account. Stop. So check received from D person, a trade receivable, was correctly debited to the bank account, but was credited to the account of P Dawson, a trade payable. Okay. So D person is our customer. So we have received the check from him. So we have to credit it, and but we mistakenly credit the D P Dawson, who is trade payable. So basically, this is payable, and we credit it. It means that we have increased it, and we didn't record the amount in D person. So what was the effect of correcting this error? So now, because previously we didn't record this credit entry in the D portion account. So now we have recorded it. So it means that we decreased the trade receivable account, and now we are correcting the payable account. So previously we carried it by increasing, like we increased it by carrying it. So now we have to rectify it by writing the amount uh, on the debit side, because we want to decrease the P docs now. So if we now decreasing it by writing the amount here on the debit side, so it means that we are decreasing the P doxon, because we mistakenly increased it previously, but now we are correcting it. That's why we decreased it now. So it means that your trade receivable is also decreased and your trade payables is also decreased. So decrease and decrease. So A option is the right option. So trial balance does not balance and a suspense account is open. It is found that a sale of 250 was carried to the sales account of 2500. So which entry will be correct in this error? Okay, so if we sell something for 250, but we carried the sale account by 2500. So we have to debit the sales account and yes. So basically the right option for this would be, we we mistakenly increase the sale account by 2500. Okay. So first of all, we have to, uh, yes. So we credited the sales account by 2500. Okay. So first of all, we have to decrease it. We have to decrease this by 2250, because the previous amount was 250. The sale was for 250, but we recorded it as 2500. So we have to decrease the sales account by crediting it. And on the debit side, there is nothing. So that's mean there is suspense account 2250. Okay, so basically we accidentally write 25 to 2500 as sales account, but the amount was 250. So it means that we have to decrease the sale account. So if we want to decrease the sale account, the nature for the sale account is carried. So if we want to decrease it, so we will be debit the sale account by 2250. And on the credit side, there is suspense account. So B option is the right option, not C. Okay. So the next question is the question number 9. Okay. So trade journal shows the following entry. So we basically debit the John by 300 and credit the Jane by 300. Both John and Jane are correct customers of the trader. Okay. Which error is journal entry correcting? Goods bought from Jane were wrongly declared to the John. So we know that these are the customers, so we didn't buy something from them. So A option is not the right option. So in the B option, if you see that like they are again talking about the buying, so this is not the option. C. In C, basically, if you see, goods sold to Jane were wrongly debited to the John. Okay. So basically, we sell goods to Jane for 300. Okay. So we could sell goods to Jane. So it means that say Jane should be debit by 300. Okay. But we wrongly debit to the John by 300. So if we want to rectify it now, so how can we rectify it? So basically, John would be credit by $300 because previously we debited it mistakenly. So that's why now we have to uh, credit the John, okay, and debit the Jane by 300. But if you see that we have debit the John but credit the Jane, so this is not the right option. So it means that C is not right. So now let's see the D option. So in the D option, if you see that goods sold to John were wrongly debited to Jane. So we sold good to John. So it means that we should debit the John. Okay. But we mistakenly debit the Jane. So it means that now we will be crediting the Jane and debiting the John. So as you can see, this is the right option because here we are crediting the Jane because we mistakenly debited before. But now because we are rectifying it, we are correcting it. So that's why we will be crediting the Jane and debiting the John. So it means that D option is the right option. Okay. So in the next part, check received from Joy was credited to the John's account. Which type of error was made? Okay, so basically whenever the account type is same and the entry, the side is same, so this would be the commission error. So if you see like both are basically our customers, so that's why this will be the commission of error. So the A option is basically the right option. Okay, so in the 7th question, total of the trial balance agree. What does it mean? So just remember that trial balance would agree whenever your debit balance is equal to the credit balances. It means that whenever you're in the ledger account, if your credit and debit balance is equal, so your trial balance would also equal. So, but if you see that in the A part, they have said that arithmetic, all the arithmetic in the ledger is correct, but it's basically doesn't matter because whenever the side is not correct, so if this is arithmetical accuracy, so after that maybe your trial balance would not be agree. All transactions have been entered in the correct ledger account. So again, if maybe if you have done something wrong in calculation, so again this is not the right option. All transactions have been entered on the correct side of the ledger. So again, this is not the reason of agreeing the trial balance. So D option is the right option because if you're in the ledger, the correct balances is your debit balance is equal to the correct balances. So only in that case, your trial balance would be agreed. So D option is the right option. Okay, so in the 6th question is that Andy was a regular customer of Khalid. He bought goods with the list price of $1,000. So just remember, the list price is the price which is before deducting the trade discount, and later paid 760 in full settlement after receiving discount of for prompt payment of 5%. So this 5% is basically the cash discount. How much trade discount did Andy receive? So if we want to find out a trade discount, so first of all we have to find out the price, the which basically written on the invoice. So this is now very simple. For example, if I say that whatever the original price, if I just write OP, so we know that I have received 5% of cash discount, and after deducting the cash discount, I have given $760 in the full settlement. So, so what was the what would be the formula for this? So formula would be um, the selling price minus discount is equal to discounted amount. So we don't know what is the exact original price, but we know that what is the percentage of the discount. So OP minus OP plus 5%. So whatever the discount is, it is applied on the original price. So that's why I have written OP multiply 5%. And we have received, we basically receive whatever the amount is, we basically paid $760 after deducting the cash discount. So I just made a equation here. Okay, so I was just let the OP is as equal to X minus OP multiply 5%. So I have just changed the 5% in the decimal, which is 0.05. So X minus OP 0.05 is equal to 760. So if X is 1, so 1 minus OP 0.05 is equal to 760. So 1 minus 0.05 is equal to 0.95. OP is equal to 760. So I just made this OP subject because I want to find out the original price. So 0.95 would be basically, this is multiply here and this would be dividing here. So 760 divided by 0.95. So this is original price is 800. So it means that 800 was the invoice sale in invoice price, like, and the list price was 1000. So it means that we have received the 200 trade discount, because this is the invoice price and this is the list price. So deduct 1000 from 800 from the 1000. So difference is 200. So 200 would be our trade discount. So in the fifth question, which document would a supplier which document would a supplier issue to a credit customer if the credit customer had returned goods or had been overcharged? So we know that whenever the goods are faulty, or whenever supplier is accepting that yes, he's basically able to like return back the goods, so it means that supplier would be issuing credit note to the customer. So it means that B option is the right option. Following ledger account was in Mina's sale ledger. So this is the Mina sale ledger. It means that this is the Mina's customer account, which a statement about the balance of first fab. This balance first fab is correct. So whenever the balance be in the sale ledger to the debit side, so it means that this is the asset for the Mina. But if this is on the credit side, in the sale letter, so this means that this is the, like, maybe she received some overcharge amount, or maybe like there's some advance amount, not advance, basically overcharge amount. So it means that now Mina has to pay this $20 back to her customer. That's why if this is written on the credit side, so this is kind of liability for Mina. So C option is the right option. So a trader Kareem purchases a new vehicle by check. He will use a vehicle to deliver goods of his customer to his customer. But how should Kareem record this transaction in his books? So we know that he purchased vehicle, so vehicle would be debit, and he purchased this vehicle for by check. So it means that his bank would decrease. So motor vehicle debit and bank credit. Okay. So in the second, we have the non-current asset inventory, trade receivables, cash at bank, and trade payables. So we want to find out the trade capital. Trade risk capital. So now this is very easy. Capital formula is equal to assets minus liability. So assets was 4,350, 180, 650, and liability was 280. So capital is equal to 4,900. So A option is the right option. Okay. So in the first one, that which actions are example of bookkeeping? Uh, which actions are example of bookkeeping? So first one, we know that preparing the final accounts is not the part, it is not a function of a bookkeeper. Other than that, all types of things, all type of maintaining cash book, maintaining journals is the function of the bookkeeper. So let's see, the first one is that entering details of check received from a customer in the cash book. Yes, this is the function of bookkeeper, so this is right. Entering details of goods purchased and credit in the purchase journal, this is also the function of bookkeeper. Producing an income statement to calculate the profit. So no, this is not the function of bookkeeper. Recording details of credit sales in the account of credit customer. So yes, again, this is because related to maintaining the sale ledger account. So yes, this is the function of the bookkeeper. So 1, 2, and 4. So B is the right option. So now we will meet in the next class. I will be solving the variant 3 of this October November 2023 paper. Goodbye. Till then, Allah Hafiz.